What's going on, everybody? Michael Silva here. Today's video is gold making a comeback. We've been seeing it bounce from these highs. Is it going to continue? We're going to be talking about that in today's video. Today's video is sponsored by Nevada King. I'm going to be talking more about Nevada King at the end of this video. Let's go ahead and hop right into the charts. All right, welcome back. So first off, I want to talk about this tweet right here. This was very interesting to me from Tom McClellan. He said, gold has an interesting 26-day trading day turning point pattern. Sometimes a bottom, sometimes a top, rarely a whiff. Now this was August 5th. What was going on right around August 5th? Well, let's pull up the 10-year yield really quick before we put up gold. But notice here, August on the weekly time frame, that was right around the bottom in the 10-year yield. Now where was gold? Well, gold was right here. Okay? And what was interesting about this 26-day trading pattern, turning point pattern that he was talking about, was once you overlay it, so these little blue lines right here are 26 days out, it was just overall pretty interesting. So you can roll it out and you can see that there have been some pretty significant turning points in the price of gold. And I found this interesting because he pretty much nailed the top. But a little bit more deeper into that also is that we noticed the same thing happened in the 10-year yield. It found a bottom. So when I pull up a chart of both the 10-year yield and gold, what you can see here as gold peaked here on its 26-day turning point cycle, and on top of that, the US 10-year yield found its bottom. It started moving up, and gold started heading down. Now, one might think to themselves, well, okay, so that means if the 10-year, because it does look like it's flagging right here where it can head higher, now there comes a point to how high it can actually go before debt is actually a problem. So how high can this go? But this is flagging and potentially go. Can gold rise with the 10-year nominal yield? Well, we have to go back in history to kind of look. And you can see here during the mid to late 70s, the orange line is gold. You can see it rocketing up, and it's also moving with the 10-year yield. How is this possible? Well, this is a nominal yield. The price of gold really does track the real yield where it matches inflation. So for example, let's go to the 10-year yield. If the 10-year yield, even if it breaks out here, but yet the Federal Reserve is trying to reach to that 2% target, right? Or is willing to go over that 2% inflation target, that's interesting to factor in, because if the 10-year nominal stays around this zone, this 2, even if it goes a little bit higher to 2, but yet inflation starts outpacing the nominal yield, the real yield, what's going to take place is it's going to remain low, which right now the real yield's negative. If that is the case, the real yield remains lower. That is actually a bullish sign for gold as the Fed is targeting higher inflation. And we can see recently taking price in the place of gold, we're starting to see it flag and break out. Now this, I want to show you, is some pretty kind of, you know how people say a technical analysis is, that's just astrology. Well, most people that say that don't quite understand how to read charts, but Tom takes it to really a whole new level. So not only did he talk about this 26 trading day turning point pattern, he also had mentioned that during full moons, now this is pretty crazy, and I'm going to show you why. This is just for fun. But during full moons, when there's a full moon that matches with the 26-day turning point pattern, so for example, you see these 26-day, these lines going down. When there's a full moon, there's typically a more powerful directional change. So this is pretty crazy. Look at right here. See that pink circle right there? I pulled up the full moon calendar just to see like the legitimacy of this. And check this out. August 3rd, November 30th, and April 26th. So if you pull back up the chart of gold, August, November, and then right here, April 26th. And you can see that it matched, those three matched with the 26-day turning point as well as the full moon. And you can see here that you saw some pretty significant turning points. So I just wanted to share that. I thought that was really cool. Now, does that mean that gold can continue this move and it's going to head higher? Well, just like it did here, it went higher. However, it started heading back lower. So it's not to say how high it can go. And you got to understand from a technical perspective, at this particular point in time, the price of gold is still below the 200-day moving average, but it is breaking out of this flag pattern. It has been making some good progress here since early April and this March bottom. So that is a good sign. But if we were to draw a diagonal line or a trend line from up here to this line and connect it out, you can see that the confluence of resistance is going to be right by the 200-day moving average, as well as that trend line there. So there's going to be a little bit of resistance up ahead to be mindful of. Now, another thing that I want to kind of note here is where we stand from a relative strength standpoint. We're looking at a relative rotation graph. And I just put on here relative to the SPY, we're looking at XLP, XLU, and GLD. This is important to me because these are more defensive, right? These are safety plays. And what we're starting to see here in the previous 9 weeks, you're starting to see a tail and then it moving into the improving category, gold, XLP, and XLU. Well, the last time we had some really turbulence in the market was around September to October, and I'll show you that. But what were they doing during that time from a relative standpoint? Well, they were doing something very similar here. XLU was coming up, XLP, and GLD. So this could be the early signs that we might see some market turbulence here within the next few months. Does that mean that there's going to be some turbulence in the price of gold as well as the equity markets? It's always possible, but sometimes from a relative standpoint, they overperform the broad market. Now, what happened during September and October is quite interesting. As you probably all remember if you're active in the markets, we had that big pullback in September, all that fear, we came right back up and then we came right back down. So just a lot of chop that took place. But leading up to that, a lot of good things took place. Now, leading up to from May to before all of that craziness, the S&P 500 ran 18.9%, so almost 19%. But what was gold doing that same exact time period? Well, I brought up the miners because the miners are typically more volatile. However, they typically make moves before, they make advancing moves before gold does, and they're typically significantly larger percentage gains. So I looked up the miners during that same time period that the S&P 500 went up 18 or 20%. These went up, the miners went up 63%. Now the GDX is, the GDXJ is the junior miners. There's also the GDX, which is not the junior miners, so they went up a little bit less. But it is important to note that typically these junior miners during these bull market runs, which we very well may be the starting point, and we'll get to that looking at a longer term chart, could be very good places to have an allocation of funds. Now let's go ahead and look at the monthly chart for gold. The monthly chart of gold at this particular point in time, you can still see it is flagging. Some can call this a cup and handle pattern right here. The price percent oscillator is still bearish at this particular point in time, but the histogram looks like it's trying to turn up. If we start breaking out from here and the bulls recapture this 5 EMA, this to me could be the very early start of a very big bull move in the precious metals space. All right, I'm excited now to talk about today's sponsor who is supporting this show. I am being compensated to discuss and bring public awareness to this specific company. I do not have any of my own money invested in this company at this particular point in time. Today's sponsor is Nevada King. They're a dominant explorer company. Explorers typically have more risk, but they can also have a lot more reward. And they are they're focused exclusively in the Battle Mountain trend, which is Nevada's most prolific gold mining trend. They are traded on the TSX under NKG, but also here in America under VKMTF. Now, you typically need a traditional brokerage like one of these in order to trade them or to invest in the company. Now, as the saying goes, you want to bet on the jockey and not the horse. I always like to look at the management behind the company first and foremost before getting any deeper. And some very interesting stuff that I want to point out here. Colin is the founder and CEO, which we'll talk more about later. Paul is the founder and executive chairman. Bassam is the CFO. And then I want to go over here to Craig Roberts. He is one of the board of directors. And these are all key executive advisors of Newfound Gold Corp, which is a different company. And that company, when I pulled up their stock chart, it rallied over 400% in the past 8 months. Now, that doesn't mean that this company is going to rally 400% in the next 8 months, but it is still interesting to see that it's the same people that are running this company that ran the previous Newfound Gold Corp that we just discussed, and they're bringing on a very similar type execution strategy. Now, Newfound Gold Corp is a $1 billion company already, and they spent $20 million on drilling to achieve those returns. So Nevada King, which will execute the same drilling methodology that Newfound Gold Corp has to achieve that rally, before a single hole has been tested, before a single rig has been put in the socket and commenced drilling, the entire sum of $10 million in exploration budget is yet to be spent, and they're beginning drilling now in the month of May. So I pulled up a chart of Nevada King, and you can see here we really just started getting volume as of recently. Look at the stock price for one. We're trading it right around 0.52. So this is, when you have 500,000 shares, at 52 cents, these stocks can move very quickly and very aggressively. So you need to make sure that you're managing risk in these type of environments. As far as a technical perspective, not too much is going on, right? We had this little kind of cupping basing pattern here where we're sitting right above that area of support. You can say that this is, coiling up tightly for a potential move to both either the upside or the downside. You can see the big pull in volume and then kind of volume dying off right here. So this could be because they are having this public awareness campaign and more people are starting to see it and starting to hear about this company. But as I see it right now, if we start breaking above 0.56, maybe that perhaps takes us a little bit higher. Here is the 2021 drilling plan, and I do find this very interesting that we're right now in the month of May. Now, the previous company that we had mentioned on this chart, Newfound Gold Corp, when they started their $20 million drilling program, we saw some pretty good results, and that's some exciting news as we're now just getting into the early stages of a $10 million drilling program right now. Now, as I previously stated in this video, we've seen that the miners can do very well in a cyclical bullish environment for the price of gold. So if we are at the early stages of that and you combine it with other factors, that could be very, very bullish. Just recently, Colin tweeted out that in the past 4 months since announcing Nevada King's going public, entrance and re-entrances into the Nevada gold exploration were some pretty big names, as you can see right here, like Newcrest and First Majestic. Now, Nevada King Gold is the 4th largest landholder, which presents a potential good opportunity when you're going up against these big billion-dollar companies, because you never know what could potentially happen. They could easily approach the management and the board of directors for possible buyout opportunities. The land package is located just in the heart of the gold mining district. It's where 92 million ounces of gold were already discovered. And as you can see here, even though Nevada King is a new company and it's very, very small compared with Kinross and Helka, both listed in this chart, because it did its early legwork, the company's land package, like I said, is the 4th largest in Nevada. Now, Nevada King was a private company for many years, and what they did during that timeline from 2015 through to 2018, when gold was flat or down and venture capitalists wanted really nothing to do with exploration or development mines, they staked their claim in Nevada. Now, in order for them to actually do that on federal land, one has to actually physically plant flags and register the claim with the Bureau, and Nevada King claimed over 8,000 stakes. This is something like 40,000 flags, which takes years in surgical legwork, but now they own the 4th largest package of any active company. So today, Nevada is already packed with competition. So if any of the giants like Newmont, Goldcorp, BHP, Vail, or any of the Barracks or the other billion-dollar players want a foothold in Nevada, they will most likely approach Nevada King's management, which is very powerful leverage to have in their place. So, as I've already stated, there's a lot of risk getting into individual miners, especially when they're doing drill projects, because we don't know what's going to come from those specific drill projects. They can be great, and you can, if you have shares invested, you can do really well, or it can be a complete flop. You really don't know. So what you can do, just to kind of give, nothing's guaranteed, but if you look at the share structure to see, who owns the company, do they really believe in this company? And you can see here 5% own is coming from the board and management. And then 39%, so this is a pretty large percent here, is owned by Palisades Gold. And Palisades Gold, that actually logo looked familiar. I didn't actually know this, but I'll talk about that in a second. But that's Colin Kettle, who is the founder and executive chairman of Palisades Gold Corp. So, it's just a good sign seeing management and the board of directors have a large position. When I saw this logo, I went to their website because it was just stuck in my head, and I realized that Palisades, if I'm saying that correctly, they're the ones that have that very popular podcast that bring on a lot of just amazing people, very intelligent people to talk about various things. So if you don't actually listen to that radio, Palisades Radio, I would give it a listen. I pulled up the thing and you could see that it's been featured in all kinds of different channels, Zero Hedge, Bloomberg, Kitco, then they have great guests on there too as well. So I thought that was really cool, and I just wanted to point that out, that it does look like they do believe in the company. This does look like something that could turn into something, and they have a proven track record, which is very nice to see. Most likely, just a full disclosure here, once again, like I said, I'm being compensated to talk about this company, but from a personal level, I wouldn't mind putting in a few $100, $500, a small portion of my portfolio, just to have some exposure into some various miners that, I may have never heard of if it wasn't for them reaching out for a sponsorship. So that's all I got for you on today's episode, everybody. Be careful out there. Have a great and wonderful weekend whenever you may be listening to this, weekday, night, day, whatever it might be. See you later.